Hi, good afternoon, everyone. Thanks so much for joining this week's weekly market review. My name is Gerald, and I will be hosting your session today. Okay, you might find it strange that it is just myself in today's weekly market review. That is because Sunny is away on the year-end holiday. So for today's session, I'll be going through an update of the market and sharing what to look out for in the week ahead. Okay, so without further ado, I will start and maybe with a short disclaimer. Today's sharing is for information purposes only, and it should not be taken to be financial advice in any way. If you have more questions around what is being discussed today, join our SIAS session that is coming out on the 13th of December. If you miss Sunny's technical analysis, he'll be joining us again on this session on the 13th of December at 7 p.m., where we'll be able to take any questions that you might have around the markets. If you find today's session helpful, do consider leaving a review on Google. And if you are interested to join SIAS as a member, you can scan the QR code here or go to the website. And the membership for SIAS will cost just $12 per year or $1 per month. Okay, so what happened in the market in the past week? Okay, if you have been following the weekly market review, what you have noticed is that this trend has been continuing for the past few weeks, where the US market continued to climb higher. So we had the S&P 500 up by 0.8%, reaching close to the 4,600 levels. The Dow Jones very strong, up 2.4% to 36,246. And then the Nasdaq also saw gains of 0.4% to close at 14,305. But the SDI did not catch up with the rally in the US, and we actually saw the SDI facing slight losses of 0.2% in the past week. Okay, so in terms of the macro developments, really what we have seen throughout November is this fall in the US 10-year government bond yields. This really came through after investors gained confidence that the Fed might not hike interest rates further after its November meeting. Okay, that happened on the 1st of November. And then the economic data points that came out after, mainly the inflation data, was also softer than expected. So as a result, the expectations around the rate hikes became more muted. And in fact, investors started to expect more aggressive rate cuts going forward. So what we see here is the US 10-year government bond yield, okay, at one point close to 5% in October. But by the time we are at the end of the month, touching close to 4.2%, okay? So quite a significant drop over the course of 1 month. That has actually helped to drive the bounce in US stocks over the past few weeks. Okay, so we go through this chart very often, which is really the expectations around what the Fed is going to do in the coming months. So when we look at the CME Fed Watch tool, what we see here is that in the upcoming Fed meeting in December, most traders are expecting that the Fed will keep interest rates unchanged. Okay, so close to 100% expectation that interest rates will be kept unchanged. But what is very noticeable is that in terms of expectations of rate cuts, it is going to be something that investors are now expecting will be brought forward. So if you look at this chart here, more than half of the traders are actually expecting that the first rate cut will come through in March 2024. If you look at our previous weekly market review, the first rate cut was initially expected sometime in June, then it was brought forward to May, and now more than 50% probability that the first rate cut will come through in March next year. Okay, so this is effectively what is happening now with the softer inflation data. Investors are not only expecting that the Fed will no longer raise interest rates further, but they're also bringing forward their expectations around when the Fed will start to cut interest rates. Okay, so to make this even more clear, I have another chart. Okay, so this is once again coming from the CME Fed Watch tool. Okay, if you look around the expectation of the Fed action in the March 2024 meeting, okay, just about 1 week or 1 month ago, more than half of the probability would be that the Fed will actually keep the interest rates unchanged at between 5.25 to 5.5%. But if you're to look at the latest expectation, okay, I just checked this last night, then what we see here as of 1st December is that more than half are now expecting that the probability of the rate cut is going to happen in the March 2024 meeting. Okay, so effectively, this is really what is driving the rally in the market as the expectation of the rate cut gets brought forward. Okay, so that is really the macro backdrop that we have seen, expectations of no further rate hikes and bring forward expectations of rate cuts. We have seen the decline in the US government bond yields, and how has that actually translated into the performance of the Singapore market. Okay, so if you look at some of the top gainers last week, we have got Keppel Corp up 6.5%, DFI Retail Group up 4.5%, Singtel up 1.8%, Venture gained 1.6%, and Sembcorp Industries gained 1.4%. Okay, so quite a number of industrial stocks here, whether is it Venture, Sembcorp Industries, effectively outperforming the STI. We will discuss a bit more about Keppel Corp later in terms of what is driving this big gain in the past week. If you were to look at some of the stocks that didn't perform as well last week, we've got SIAS that was down 2.2%. A number of property names, UOL and Hong Kong Land, also having losses in the past week. Seatrium, that we'll also discuss a bit more in detail later, facing losses of more than 5%. And then Thai Beverage, after reporting its results, also having losses of more than 5%. Okay, so I've been asking around what investors are interested to find out. So for this week, we have got 3 stocks that investors have indicated that they are keen to get an update on. The first one is Keppel Corp. Okay, so earlier we saw that it was the top gainer within the STI in the past week. Okay, so if you look at the share price from a low of close to $6 back in October, it has actually recovered to now trading at about $6.85. Okay, so quite a significant rebound over the past 1 month. Okay, so if we were to do a quick recap around the recent results, okay, the company didn't post its profit for the 3rd quarter because it was just an operational update. But if you were to look at the first half results, what we see here is that if you were to look at the continuing operations, the profit from continuing operations was up 3% in the first half of this year versus the first half of the previous year. Okay, if you have not really been following Keppel Corp, what is important to note is that it has actually divested off its offshore and marine business. So the key contributors to its profit now would be the infrastructure division, the real estate division, as well as the connectivity division. So what is actually helping to boost its profit is the infrastructure division, where if you look at the profit in the first half of this year, 291 million, doubling from what it was last year. Real estate, fairly weak in the first half of this year compared to the previous year, due to some of the headwinds it might be facing in the Chinese market. So all of that has effectively led to this increase in profit that we see in the first half of this year versus the first half of the previous year. Okay, so effectively what we have also seen for Keppel is that it is looking to grow its funds under management, where it is then able to earn an asset management fee. if you're to look at what the funds under management was in 2016, it was at 25 billion. The company then set a target for it to grow to 50 billion, and it was able to exceed that by the first half of this year and reaching 53 billion. And it has further updated its target to be able to grow its funds under management to 100 billion by 2026 and 200 billion by 2030. Okay. If you're to look at the asset management fees that Keppel Corp is able to earn, it has effectively grown together with the growth in the funds under management. Okay, so effectively growing from 128 million in 2016 to 267 million in 2022. Okay, so what was the news last week that actually led to the share price gain for Keppel? Effectively, what the company announced is that you'll be acquiring an initial 50% stake in Amon Capital for a consideration of about 357 million euros, which will work out to 502 million Singapore dollars. Okay, so what this will serve is Keppel's European real estate platform, and what they intend for this acquisition to be able to help them with is to gain a foothold in Europe. If you have not heard about this company, Amon, effectively it is the #1 European real estate manager by funds raised in the last 5 years. Okay, so some of the key statistics shared by Keppel is that it has a proven track record of 16 years. It has funds under management of 24 billion. Okay, so this will continue to help Keppel to grow its funds under management. Okay, in terms of some of the other numbers that were shared by Keppel, this is expected to be able to boost its earnings per share. Okay, so if this was an acquisition that was previously made, then it is expected to boost the earnings per share in 2022 slightly from 52.1 cents to 52.4 cents. Okay, so because of the funds under management that the target has, the recurring income for Keppel is also expected to grow from 503 million to 512 million. Okay, so Keppel has also earlier I shared that it has been able to grow its funds under management, but at the same time, it's also been able to monetize some of its existing assets. Okay, so initially it has a target to be able to monetize 3 to 5 billion of assets. And what we have seen is that since then, it has announced 5.3 billion worth of assets that it has been able to monetize. Okay, so some of this would effectively include divestment of different property assets. And year to date, we have seen the company actually monetizing close to 1 billion worth of assets. Okay, so based on the current target, they want to be able to monetize 10 to 12 billion of assets by end 2026, with the eventual goal hitting 17.5 billion. Okay, so how does this actually translate to shareholders? We have seen Keppel actually paying out more distributions to shareholders. Okay, so so far we have seen close to $2.70 per share, comprising cash dividends as well as distributions in specie paid out to shareholders. Okay, so in March 2023, there was the distribution of the Sembcorp Marine shares, okay, equivalent of $2.19 per share. There was a final cash dividend of 18 cents per share, an interim cash dividend of 15 cents per share, and at the same time, distribution in specie of Keppel REIT units worth about 18 cents per share. So far, shareholders have received $2.70 worth, whether is it in cash dividends or distributions in specie. Okay, so in a nutshell, that is Keppel Corp's latest update with the acquisition and what we have seen in terms of the dividend payout to shareholders. Okay, so next we have got Seatrium. Effectively, if you look at the share price, moving in opposite direction of what we have seen for Keppel. Okay, so after reaching above 14 cents per share, sometime in September, the share price has steadily declined and reaching close to 10 cents last week. Okay, so what we'll do is try to understand some of the latest developments for Seatrium and also what is driving the weakness in the share price. Okay, so in case you are wondering what is Seatrium, okay, so this was formerly Sembcorp Marine. Okay, just that after the acquisition of the assets from Keppel Offshore Marine, it has been renamed now Seatrium. And effectively, the core business of Seatrium will still revolve a few key areas. Okay, so you've got oil and gas new builds and conversions, offshore renewables and new energy, specialized shipbuildings, repairs and upgrades, as well as new product development. Okay, so a combination of what we are familiar with in the past, such as the oil and gas new build, but also what the company is increasingly focused on, which is in the renewable segment. Okay, so what do we have in terms of the renewable segment? The company wants to be able to tap on opportunities in offshore wind. Okay, it also wants to tap on some of the other new energy segments, such as carbon capture, utilization, and storage, marine decarbonization, as well as how they can help to make oil and gas a greener industry. Okay, so if we're to look at the first half results, okay, what we have seen is that the revenue has actually bounced very strongly from 1.1 billion in the first half of 2022 to 2.9 billion in the first half of 2023. Okay, so this is really a reason as a result of the larger order book that it has following the combination with Keppel Offshore Marine. That has actually helped to lift the revenue for Seatrium. But what we have seen is that the company continues to make a loss. Okay, so this is really a result of some of the provisions that it has taken for the contracts that it has under construction, as well as merger expenses. Okay, so this is something that investors might be concerned about, because while the revenue has actually picked up, the company has continued to report an operating loss as well as a net loss. Okay, if you were to look at the order book in recent quarters, we saw this very big bounce between December 2022 and March 2023 as a result of the completion of the business combination with Keppel Offshore Marine. And on top of that, the company managed to secure a few large orders. But if you're to look at the recent quarters, we have seen a slight decline in terms of its order book to just be at about 17.7 billion as of September 2023. Okay, so effectively, it hasn't been able to secure as much new orders compared to what it is executing in terms of its order book, which is why we have seen this decline in order book from March of this year. One of the larger factors that's also driving the weakness in Seatrium share price is really this fall in oil prices over the past few weeks. Okay, so if you look at oil prices, it effectively went to above $90 per barrel sometime in October. This is driven by the Middle East unrest and effectively causing concerns about the supply of oil. But since then, oil prices have actually weakened. Okay, so effectively, we have now seen oil falling back to below $80 per barrel once again. And that is driving maybe concerns around whether Seatrium will be able to maintain its order book and be able to grow its revenue to be able to turn around a profit once again. Okay, so that is Seatrium in terms of what is driving some of the weakness in the share price. We'll be continuing to keep a lookout for where the oil price is actually headed to actually understand whether it will be able to sustain its order momentum. Okay, the last name that I'll be going through tonight will be Netlink Trust. Okay, this is a name that we recently held the Corporate Connect with. So if you are interested to actually hear what the management has to say, do look out for the replay that's now available on SIAS channels. But what we see here is that the share price has actually come off since May this year from above 90 cents to about 80 cents. And then it's effectively hovered between the 82 cents to 84 cents level. But what was the major development in the past week is that the long-awaited price review is finally completed, and we know what are the kinds of returns it is able to make on the fiber network that it has in Singapore over the next few years. Okay, so in case you are not familiar with NetLink Trust, you would still be able to come across its infrastructure in your day-to-day life. It is the provider of the broadband fiber network in Singapore, serving residential as well as non-residential users. Okay, so after the price review that came out last week, these are the latest prices that we see in terms of the monthly recurring charge. For residential, it is a slight decrease from $13.80 to $13.50. Non-residential maintaining at $55. Okay, so effectively not much changes apart from the slight decrease that we see for residential monthly recurring charge. Okay, so you might be wondering, oh, how is this price actually determined? Effectively, this is actually evaluated by the regulator based on a pricing model. Okay, so you have got the regulated asset base, and then you've got the weighted average cost of capital. So using this, there is a formula that will be used to calculate the return on capital, and thereafter be used to calculate what NetLink Trust is able to earn in terms of the regulated revenue. Okay, so with the slight decrease that we see for what it is able to charge the residential households, I think generally the view is that it is not going to be impacting its revenue that much. Okay, and the expectation is that NetLink Trust is still able to sustain its dividend payout, like what it has been able to pay to unit holders over the past few years. How is it able to do so? I think what the management is actually hoping to do is to be able to grow the number of connection points. So if you look at the residential connections, it has grown over the years, okay, from 1.19 million in FY18 to 1.485 million in FY23. Likewise, this is the trend that we see for non-residential, okay, effectively from 43,900 in FY18 to 52,000 in FY23. So even though we see the slight decrease in the pricing for residential connections, what the trust is actually hoping to do is to be able to offset that with the growth in its connection points across both residential as well as non-residential connections. Okay, so in a nutshell, we have gone through Keppel, Seatrium, as well as NetLink Trust. As we go into December, the market is getting a bit quieter, but we still have a few activities to keep a lookout for. We have a SIAS Corporate Connect that we'll be hosting with iFast tomorrow, 5th of December. And at the same time, for those of you who are following the Singapore T-bill closely, we have the second last T-bill auction for the 6-month Singapore T-bill coming out on the 7th of December on Thursday. Okay, so apart from that, the market seems to be relatively quiet without much further company results announcement. And that is something that might actually keep liquidity fairly light in the Singapore market until the end of the year. Okay, so continue to keep a lookout for some of these events that are happening. If you've got more questions around what has been discussed today, do join us for the SIAS that is coming up. And with that, I'll end today's session and hope you have a good week in the investing market in the coming week ahead. Okay, thanks so much for your time and thanks for joining us today.